Hello and welcome to our latest market alert. Today I want to speak about the US stock markets and begin with the US 500 cash. As you can see here, this is a daily chart, and I just wanted to point out some interesting RSI divergence we've had lately. The market made an all-time high of 25.83 last Friday, but since then we have actually pulled back, we've consolidated, and we could be set for a second successive inside day today. Talking about the RSI, you can see during this move higher that we saw from the middle of August up until last week's high, we had a support with the RSI consistently rising higher, suggesting momentum was rising in the market. However, in the recent week or so, we have seen a marked pullback in this RSI, and this divergence could be seen as a sign that momentum is waning in this market. In terms of our clients, we've had a lot of interest for short positions from XTB clients recently, and you can see here 77% of XTB clients are short according to the client sentiment indicator on our website. Next, I want to turn our attention to the US 30 cash. Last week this market also made an all-time high, this time at 23485, and it's been quite a slow steady move higher we've seen this year in this market. You can see we've seen several steps where the market's made a previous all-time high, ran into it as resistance, then once breaking above it's made the next leg higher. We saw this pattern play out once more throughout the summer, and this could be a possible pattern we see going forward, so it's important to keep an eye on 23485 as potential resistance. In terms of volatility, this market's been very quiet. It's now been 51 days since we've had a 1% move, and 95% of the days this year have seen a smaller than 1% move for this market. This is on course to be the least volatile year on record. Somewhere where we have had some volatility lately is the US 100 cash. You can see here we saw a large spike higher last Friday, in fact the largest daily gain since November of last year. You can see the market moved strongly higher throughout the first part of the year, but there was a big lull throughout the summer. But this recent leg higher could be suggestive of showing further upside going forward. One of the reasons for this large move higher we got last Friday was a huge surge in Amazon. You can see we had an 8% gap higher in Amazon after they reported earnings after the closing bell on Thursday. So the market began on Friday markedly higher on these strong Q3 earnings. This was actually quite a contrast to what we saw at the previous earnings release when they announced their second quarter results back in July, when we got some disappointment, quite a large gap lower, and then more weakness. The market after the gap higher continued to rise, and we made an all-time high yesterday of 1122. Looking ahead, I want to just bring your attention to two other tech companies that have got big earnings releases in the coming days. First off, I want to talk about Facebook. Facebook is hammering on its all-time high at the moment, around the 180 handle, and the company is set to report tomorrow, which is Wednesday, the 1st of November, after the closing bell. Earnings per share expected to come in at $1.30 and revenues at $9.88. But you can see after Amazon's strong results last week, we've already seen some traders trying to front run this release. We've seen a strong move higher to the all-time high in recent days. On Thursday, we have the reports of Apple, which is the largest of all companies on the US stock market, and it's set to report after the closing bell. Earnings per share expected to come in at 186 with 46 billion revenue, and you can see we've got similar price action here where traders have tried to front run this release to get long heading into it. And you can see from the Amazon release overnight on Thursday, we opened markedly higher on Friday, and we've seen a really strong move up on Friday and Monday, and today we've just set a new all-time high. Elsewhere, I just want to bring your attention to a couple of events we have this week that could be major for the US stock market. We've got the FOMC rate decision at the earlier time of 6 o'clock here, but the rate is widely expected to be kept on hold at its current levels. There's no press conference associated with this, so expectations are very low heading into here. So as always, when you have very low expectations for an event, there is a lot of scope for disappointment. Moving on to Friday, and we have one of the biggest events of the month with the non-farm employment change. This is out again at the earlier time of 12:30. You can see we've got an incredible 314,000 jobs expected to be added. So we've got very high expectations going into this after last time we saw a drop of 33,000 jobs. Okay, thanks for listening, and best of luck if you're trading these markets in the coming days.